The current level of $72 a barrel is a political hiatus at the moment. The world's economy is actually coming off the boil. The data coming out of China is not particularly good.
They did go out of their way to put business at ease.
Shouldn't we know what this National Wealth Fund is and how it's measured?
In a way, there's sort of been three things that the Labour government have told us. The first one is
Welcome to Talking Markets, brought to you by Capital.com. I'm Michael Wilson, and I'm joined by my friend and veteran city commentator, David Buik. David,
and the bad penny, good morning.
Good morning. And I'm very pleased to say we're joined by a special guest on this podcast, Hugo Duncan, who's the business editor of the Daily Mail.
Welcome.
good morning. Thank you.
How do you rate, I mean, it's not that long since the general election, how do you rate the present administration so far and their attitude, most importantly, towards business?
Well, I think in the build-up to the election, they obviously said as little as they could, but they did go out of their way to put business at ease, put the city at ease, to get them on side. I think it was a fairly easy job because everyone knew what the outcome was going to be. So I think people were willing and wanted to listen because they wanted to see what was coming. But you know, a lot of the noises that were being made were the right ones. And actually, I think that presented a very good opportunity for the incoming government, particularly when you see what's going on elsewhere, and particularly when you see actually the size of the majority, whether that's what you wanted or not. We've got a stable government. Now,
gilt markets has told us that as well.
Precisely, whereas look at what's going on in Spain, in France, in Germany, where obviously the economy is in crisis and politics there is in flux, French politics in real trouble, what's going to happen in America. So, there was a great opportunity really to hit the ground running and be very, very positive on the economy and on business, despite, there are problems out there, we know that, let's not pretend there aren't. But ever since the election or soon afterwards, all we've heard is doom and gloom. The growth agenda seems to have been replaced by,
it's going to get worse.
Financial crises, economic crises. All we hear in terms of business really now is workers' rights, is threats of higher taxes, and so on. So there's been this sort of, I think, this real change. I mean, if there was a honeymoon period and if business was happy with the outcome, I think they're beginning to slightly worried because Labour and potentially in the October budget are going to show their true colours.
One of the things that I was taught ever since I've been in markets, and I know you have as a journalist, a business journalist as well, sentiment is utterly key.
So sentiment is so important, and in a way, there's sort of been three things that the Labour government have told us since they came into power. I think all of which have been questions. Yeah. I think the first one is the worst economic inheritance since the Second World War. I mean, does the Chancellor need to say that when she's won so handsomely and the economy is in fact growing, fastest growing economy in the G7 in the first half of the year? Fine, per capita where we were pre-COVID, pre-crisis, it hasn't been great. It hasn't been great anywhere really, perhaps apart from America, which obviously has a very different way of going about things.
Well, that's showing signs of wobbling.
And that's showing signs of wobbling. The second one was the £22 billion black hole that appeared from nowhere.
Well, again, will we ever get the truth about that, do you think?
9 billion of it was their public sector pay deals. I mean, nearly half of it. They didn't have to do that. Now, they needed to do something.
I think it was a mistake her calling Jeremy Hunt a liar in Parliament.
I think actually you can call him a lot of things, but I don't think people think Jeremy Hunt was dishonest.
No.
And then what do they do, having handed out these handsome pay awards to the public sector, who, of course, their unions are now coming back for more, and so on. One of the only policies we actually know and has been announced is they're going to scrap winter fuel payments for 10 million pensioners, many of whom really relied on it. Yes, there's some wealthy pensioners who, of course, didn't need it, but a lot of these 10 million are going to lose it. It's really going to hurt, while train drivers and so on are getting big pay awards. To justify that, we then have this third, possibly the most ludicrous statement of all, that if they didn't do it, there'd have been a run on the pound. This policy saves £1.4 billion. The idea that if they didn't cut winter fuel payments, there'd have been a run on the pound, which I think we heard last weekend. That's just for the birds. So it makes their arguments for what they're going to do ahead of the budget. They are, I think, in danger of losing some credibility, certainly with the electorate, if not necessarily with the markets as yet. I think they're in danger of losing some credibility, and therefore will find it a harder sell rather than an easier sell because it was such a disaster that they inherited.
Hugo, you touched on interest rates there. It looks, does it not, that more and more are now saying maybe inflation is a bit sticky, and maybe and also GDP is not quite going the gangbusters that
No, there was
Mr. Sunak said it was.
Well,
all those months ago.
the economy did bounce back strongly at the start of this year. That was likely to always be a temporary. I mean, I think we grew 1.5% in the first 6 months. I mean, I don't think anyone's going to think we're going to be banging out 3% a year for the next however many long. I mean, that is going to come off a bit, but there is momentum there. It may well now be slowing a bit, but it's still, it's not disastrous. It needs to be better. It needs to be more sustainable. Particularly when you take in the per capita state of play. And indeed, inflation fell to 2%. It's now ticked back up a bit. We've got another energy price rise coming in October, and so yes, inflation is sticky, but in the UK, if it's sticky at around 2 to 3%, then it's not so much to worry about, is it? It's if it's sticky at around 5 to 6, or even worse. We obviously saw it go up above 11 in late 2022. So I mean, and it's sticky to such an extent that we still got very restrictive monetary policy. At 5%, we're still higher than would be the sort of the just we're not doing anything. It's just things are in equilibrium. So. Obviously, interest rates are not going to go back down to where they were, but for however many 100 years ahead of the financial crisis, the average was 5%. And I think for the 10 years ahead of the financial crisis, the decade before, it was 5%. Now, if people have to get used to the idea that a steady interest rate environment may well be 3 to 5%, not 0.25 to 1, which was a blip.
And you can listen to the full version of that podcast wherever you get your podcasts from.